Hello and welcome to Business and Banking Dialogue Show, your one-stop shop for the best of best in topics of financial world and people from who are subject matter experts in a relative area. We are live across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. So welcome all people who are participants who are in India as well as abroad. We strive to get you new topics. Like on Monday, as you know, we brought to you financial crimes and forensic investigation. And today, I'm very happy to tell you, today is also a new topic on social stock exchange. Is it an experiment or is it really going to happen? Is what we're going to talk today. So ladies and gentlemen, let me give you a background to social stock exchange. So our finance minister in her budget speech, July 2019, I think, the Indian finance minister, Ms. Nirmala Sitharaman, proposed a stock exchange, what we call as SSE, for social enterprises and voluntary organizations working for social welfare to help them raise capital through debt, equity, and mutual funds. The proposed exchange will be under the regulation of SEBI and will allow the listing of social enterprises and voluntary organizations and will function as an electronic fundraising platform. So the thoughts were very good. Currently, as you know, these NGOs, these kind of social organizations are very much dependent on the private and other players, individual players, to get them funding. So in order to take this forward, in September 2019, SEBI constituted a working group to take this further under chairmanship of Izzat Hussain, director, who was a director earlier of State Bank of India Foundation. Mr. Vineet Rai, who is our guest today, is a member of the working group. He has appeared in our earlier shows, so you would recollect him. Vineet is the chairman of Aavishaar Group, which is a purpose-built impact platform with assets under management of over US 1 billion. And the organization is focused on delivering high-quality impact and returns sustainability. So that's Vineet for you. He has appeared earlier in our shows, so a warm welcome to you, Vineet, from all of us. Thank you. Vineet, what is social stock exchange and how is it different from the other stock exchanges that we know, like equity stock exchange, commodity stock exchange, bullion, and many others we know? So how is it that the social stock exchange which the FMS talked about is different from the other stock exchanges?
Yeah, first, thank you for having me, Keki, again, and also choosing a very interesting, probably a very relevant topic in the post-COVID world, where the glaring challenges that the inequity in the world has come to fore quite clearly, as we saw thousands and millions of people, or at least lakhs of people, hundreds and thousands of people walking back to their destinations, being in some sense left over. And as Mr. Arun Maira in today's piece called them, they were actually clinging on the top of the buses of the economic GDP growth. And when the brakes was applied, they all fell road. And those who were sitting inside the bus, people who are better off, did not even know that there are millions of these people who are carrying this. I think the announcement by FM was actually a very futuristic, very forward-looking, and a very positive announcement, and also very clearly shows that the government is reasonably well aware of the current challenges of the economic development. And I think how and why people are being left out, and how do you actually bring them in the ecosystem? So I think the important part that I'm trying to highlight is, which I think is also in people's mind, is there a relevance to a stock market for those who are actually really poor? I mean, how do they participate, what they do? I think it is not really about the people at the base of the pyramid. It is the institutions who deal with the people at the base of the pyramid and are therefore the channels for capital to flow. They, at least the best of them, should have an opportunity to engage with the best of the capital that is available. Because there is no difference. Capital is actually about risk and reward. And there are many different kinds of capitals. There is philanthropic capital, CSR capital, pure equity capital, equity that seeks risk and reward. So you have venture capital, private equity. There are many different kinds, and stock market is one such avenue for generating capital. Now, when you talk about a normal stock markets, the idea behind the stock market is how do you get the public to participate in the economic growth taking place in the country? So let's say if I'm a guy who's not poor, I have significant capital, but I don't have enough capital that I can put in 10 million, $20 million or 100 crore rupees, but I want to participate in the lots of 5,000, 10,000, 20,000 rupees. And instead of getting a very slow growth rate of 4 or 5%, I think I have the capability to deal with the risks of the markets to participate in a 15% growth rate. Now that's really where stock markets comes into play, and a very strong technology in the stock markets allows people like me who are small time players participate with 5,000, 10,000 rupees in some of the largest and the most gigantic growth engines. So whether it is shares of buying shares of Reliance or Tata's or Axis Bank or ICICI or Kotak Mahindra Bank, you can do that despite not having any great literature or knowledge, analysis, capability, because there is an entire ecosystem that is doing that for you. And then there are systems and ways and mechanisms that will help you participate in that market. That's really what a stock exchange does. And it actually brought in a regulatory oversight so that you are not taken for a ride. And I think, so therefore what is happening is my desire to participate is being, so I as an investor can participate. The participation of that investor is regulated. There is an infrastructure and an ecosystem built that allows me to participate. And on top of that, those who are taking my money are under a regulatory watch so that they cannot play with my money or do something which is not right. And if they do so, they will be penalized. That's really what, in my view, I'm trying to make it as simple as possible for everyone. That's what a stock exchange does. Now think about it like this. There are millions of people who have gone back to their states. So UP, Bihar, Jharkhand, Orissa, Bengal, from Maharashtra, Mumbai, Delhi, etc. Now these people need to be fed, they need to be supported, and a lot of Indians have actually contributed. But almost everybody was unsure who to give money, where to give money. Is the money going to go to the right people? Is there a distribution? Is my money going to lie in somebody's bank account? Will it be used? Will it be misused? There are lots and lots of questions that come to your mind. And I think it will be interesting to note at this point of time that India has roughly 2 million, not one, not two, not three, roughly 2 million enterprises / NPOs / NGOs, not-for-profits and non-governmental organizations who are existing in different shapes and forms. So it's not that we are actually a country that is unknown for not-for-profits. We have a very large not-for-profit and even for-profit companies who claim they are making an impact. They exist on the ground. Now, these enterprises are scattered, spread over, very difficult to access, and you don't really know them. There is no organized way to reach them. The biggest challenge that these enterprises have seen, and I'll just give you some statistics to understand. So on one side, there are 2 million. Roughly, the giving sector in India is around 72,000, 75,000 crores. Of this 75,000 crores, roughly 15,000 crores comes from outside India. And then there is another 30, 40, 50,000 crores that CSR is adding. There is a significant contribution that comes from the government. So the numbers actually move between 72,000 to 150,000 crores, depending on how you see it. And then there are different contributors to this game. The foreign contribution has seen a significant fall in last 2-3 years, roughly by 60%. That means something that was around 15,000 crores have fallen down to 6,000 crores. There is a gap of 9,000 crores that has been created. Of course, CSR has come in and has contributed. The numbers vary depending on different reports. Some claim it is 20,000 crores, some claim it's 50,000 crores. Government is probably the largest social spender, and a large number of our large social enterprises actually are driven by government state governments and central government grants. So they are driven by that. And then there are a lot of personal giving, individuals, small individuals, people like me and all, and some philanthropic institutions, Tata Trust, quite famous, Premji Foundation and others, who are playing a significant role. Now, the problem is this capital that we have all put together is still very, very small compared to the needs of India. I was part of a report called Better Business, Better World that Paul Polman was the chair, and 40 of us wrote that report. And in that report, one of the key identities, and we created a report specifically for India. This report was talking about Sustainable Development Goals 2030 and was trying to say what will be India's structure in 2030 or the world's outlook in 2030. And we wanted the United Nations and all the governments of the world have agreed that there will be no hunger, no poverty, no inequity. Now, what has happened in COVID is you have actually wiped out last 20 years of the work and made the task of to reach 2030 very difficult. Given all this context, what you require, as per our report, was India requires roughly $600 billion of social investment every year. I'm not talking about, so this is 2018, 2 years before COVID, and COVID has changed this number quite significantly. Just to give you, this is 25% of our GDP. 600 billion is roughly 25% of your GDP, current GDP. Oh. Now, India therefore has to attract money equivalent to 25% of its GDP to actually deal with the challenges. Had COVID not happened, again, I'll qualify myself, had COVID not happened. Post-COVID, this quantum, we don't really know. Let's assume for a minute, for the better, let's say it's doubled or it has gone up by 50%. You're talking about 40 to 50% of our GDP. You require that amount of cash. How do you actually look at what is going on in this country? And in that context, what is important is not, we have, as I said, 2 million institutions who are dealing with poor people. They are starved of capital, and we need to find new ways of engaging capital. Now, we have legal and regulatory issues. We have something called Foreign Contribution Regulation Act, which actually is the reason why the foreign contribution is dropped, because we don't want people to actually misuse. So we want capital to be regulated. Capital, unfortunately, going in as a donation does not need much regulation. We do not want people to come with agendas behind their money. So how do you control all this? This can actually be done in case a regulator takes up the responsibility. Now, who will be the regulator who will take up the responsibility? Should it be RBI? Should it be SEBI? Now, SEBI is a regulator for securities, not for profit or not for profit. RBI is a regulator for banks and non-banking finance activities. So where do you create a new regulator? And I think, therefore, in the wisdom of the government, they probably thought that if you create a regulatory position where the job is to attract capital, but the thinking has to be done from the point of view of the capital. How would it actually like to engage? And then I think the more interesting thing which I would like to state is there is a new revolution taking place across the globe, which India has been a pioneer. But unfortunately, our pioneering status is not reflected in our taking the leadership on the talking points. So from a talking point perspective, in the space of impact investment, which is a new global revolution, our role has actually been quite limited, despite India being the laboratory for impact investing for the whole world. Now, impact investing has gone from almost nothing in 2007, 2008 to roughly around $750 billion a year at this point of time. So total assets that are under management in impact investing is 750 billion, growing very rapidly. Under the circumstances, given that India has a very deep role in this space, why not actually attract more capital to India? So if you take all this into consideration and you look at KK, you or me trying to contribute to a not-for-profit, but supported by a regulation in a very transparent, in a very open way, like it happens in a listed company, then it would make you and me spend probably more amount of money in making impact happen, because we are confident impact is happening. And if there is something goes wrong, there is a penalty that will take place because the regulator is involved. So that's one aspect. The second, if I'm somebody sitting, let's say I'm a pension fund or an insurance fund sitting out of New York or Japan or Switzerland, and we want to actually help the world achieve sustainable development goals, but we want to make returns while doing it. And we say, okay, India just if India achieves its goal, world's 40% goals are achieved. So maybe let's invest in India. Let's say that's actually my ask. How do I invest in India, and how do I identify large scale, high quality impact targets? And India goes and say, hey, we have created this beautiful structure called social stock exchange, where our regulator will guarantee you that transparency, reporting, ethnicity, everything will be taken care by the regulator. You come without any fear and participate, because we are here to provide you that clarity. And by the way, in addition, we'll provide you some arbitrage also, which means because you are helping India meet its SDG goals, we might actually waive off. Now, this is actually, this is what the proposal is, but we will waive off some of the complexities that we offer to you if you come in just to make money. So that's really what we are trying to do, in my view. What the government is trying to do is create a structure that will attract the kind of money that wants to be long-term, that wants to build India, that wants to participate in changing the future of those who struggled, and take India to a place where we live in a world where we don't see hunger, poverty, inequity, and many other challenges that we see.
Yeah. So that's great, Vineet. I think, ladies and gentlemen, I hope you're getting a gist of what social stock exchange is all about. Okay, it's a new concept, so it's just about coming in. The committee has met. I think it must have recommended something. We'll know all about it, but this is getting very, very interesting according to me. And what's coming in the days is going to be really really wonderful. Like today, you and me want to invest or give some charity. We know the migrants are having a problem, so we all have that heart that we should do something. Question is, whom to give, where to give, are they trustworthy? So these are like everyone's mind. So if we have regulated social organizations, perhaps our thoughts of these kind of thoughts will not come. So Vineet, I have a question for you. Is the social stock exchange only for non-profit organizations?
No, so I think let me actually again try to explain that the stock exchange per se is not really the innovation here. As you know, there are 14 odd social stock exchanges that have been conceptualized across the globe. I think the uniqueness, and India's social stock exchange therefore is very unique. We are actually not saying that the social stock exchange is unique. We are saying that the government of India is bringing a regulator to regulate the idea of social stock exchange. That is unique. Nowhere in the world the regulator is involved in actually managing a social stock exchange. That's the real innovation. Because stock exchange technology is fairly well known. There is no real stakes. We are not really saying we are coming up with the world's best way of measuring impact. None of that is our claim. We are saying that whatever claim, if Vineet Rai wants to list his not-for-profit or want to list a for-profit entity, he goes to the stock exchange, he makes a claim. Securities and Exchange Board of India would, by actually using different vehicles, norms, regulations, rules, will verify what I am claiming. And only after full verification will it allow me to actually do a listing. And in case down the line, I do some hanky-panky or something wrong, SEBI as a regulator will hold me accountable for the statements I have made and will protect the interest of the investor coming from anywhere in the world. And this will make it the most unique step taken by any institution anywhere in the world.
Oh, that's great. So you're saying that there are some other 14 countries having these kind of things, but they don't have a regulator, and that's the difference that we are talking about.
Yeah. So I think you can actually, I can start a stock exchange, because I can actually just go and say I am a stock exchange, but actually basically a repository and exchange of information, not really a regulated stock exchange. There is a huge difference. Stock exchange is actually about settlement. It's about technology. It's about speed. It's about efficiency. It's about transparency. It's about regulation.
Yeah.
You can take 1/100th of it and say I am a stock exchange. India has actually gone the other way around. Government of India has actually said we will actually basically provide adequate infrastructure support guidelines for the current stock exchanges to become social stock exchanges. because we believe we have a huge demand and we must do all the right things to attract the supply. Who are the suppliers of capital? Supplier of capital are people sitting outside, people who want to participate in sustainable development goals, people who want to participate in impact investing. This is all for-profit side. Then there are donors who want to give money to India. As I told you, $2 billion has actually become less than $1 billion, so a 60% decline. How do we arrest that? How do we bring that money? How do we actually take away the confusion between Foreign Contribution Regulation Act, etc.? So these are the things that we have been trying to do. Whether this is done 100% accepted or not is a different matter. How do you actually help build the capacity of the not-for-profit world to participate in a very transparent exchange with those who want to give donations? How do you actually bring in financial acumen to the social enterprise so that they can actually create value for themselves? Remember that it is not about just helping the poor. It is also the capacity of the institution that is helping the poor that needs to go up. And in India, because as I said, we have 2 million enterprises. Now, these 2 million enterprises and not-for-profits do not necessarily tell you that we are great at it, because the scale that we have achieved is very insignificant. Very few enterprises have even reached a scale where their budgets are $50 million, 300 crores. There are very few. You can count on your fingers the not-for-profits that will have a budget of 50 million or 70 million or $100 million in a country which has 130 crore people. That's an insignificant amount from an impact perspective. On a country that actually claims it has more than 20% of its population, that's roughly 26 crore, actually living below the poverty line. Even today, we actually are spending way too little to help those who are at the base of the pyramid. And therefore, this is a very forward-looking step, a very challenging one, but a very, very good one. Are we all worried about whether it will be a success or failure? Well, there are lots of questions that we don't have answers to. But what I can say is, safely tell you that we cannot have any excuse to offer given the kind of support and the vision that the government has shown.
Yeah. So with the kind of requirement that you're talking about, 600 billion, even before the COVID time. So I think we need a proper regulated, some kind of a body which will, which will have trust of the people. So perhaps that's, and like you said, it's a very forward-looking, no doubt about it. This is something so very unique, not heard about, and so that it'll be interesting to see how the days come. So tell me, Vineet, what are the recommendations of the Ishat committee? You don't have to tell all of them, maybe the top 3, so that the participants get a perspective on where we are going.
So I think the first is as a committee, Mr. Ishat Hussain was actually the chair. He's famous for being the long-standing director on Tata Sons. So a very, very kind, nice, and engaging individual. He brought in his wisdom both from the corporate world, finance world, as well as the not-for-profit world. He serves on multiple foundations. So, but we also had the services of people like Girish Sohani, the president or CEO of BIF, which is one of the largest NGOs in India. Amit Chandra, the chairman of Bain Capital in India. Rupa Kudwa, CEO of Omidyar. And many others who actually played a fairly active role. Of course, government nominees and semi-nominees who helped us deal with this situation. I think the most important acknowledgement is that we believe first we had to align what SEBI does. What does SEBI do? SEBI regulates securities, that is Securities and Exchange Board of India. Its job is to manage and regulate securities. That's its mandate. So we had to first come and understand what is a security and how would SEBI regulate securities launched by a not-for-profit and for-profit institution. The second part is how do these securities qualify as a social stock exchange security, different from a stock exchange security. That was the second aspect of it. The third aspect was that if you are able to actually make these two distinctions, is there actually enough market? And what kind of market making will you have to do, both from attracting the people to come to the stock exchange and the instruments or the securities that should get listed. So the first acknowledgement we started with by saying the not-for-profit world is very different from the for-profit world. and therefore the instrumentalities and the roles and responsibilities of the securities will be very different. So what, in terms of coming to the recommendation, the first recommendation was that can you come up with securities that can get listed? And we realized Section 8 companies, which are part of the not-for-profit world, these are companies listed, these are companies that can actually issue securities. And we were encouraging them to issue a zero coupon, zero principal security. Effectively, you actually convert a donation into a bond. You actually list a bond where the person giving the money is effectively foregoing his or her right to take the money back. But it is still a bond, and it is actually structured in such a manner that its utilization will require significant reporting obligations, which essentially brings down transparency and a lot of pre-work before anybody raises money from you. So what it does, it creates transparency for you. So that's actually the first one, a zero coupon, zero principal bond, which will allow, and then you can write it off once actually the project is over. So let's say you can go and say, hey, I actually want to develop 100 schools, or there are 100 schools who come together and say that if we receive 10 crore rupees, then over next 5 years, we will be able to increase our learning outcomes by this factor. And the schools come together, agree to a pedagogy, etc., and then come and ask for a bond demonstrating how they will use capital and how this capital will improve learning outcomes, with the commitment that nobody will take this money back. So we'll just give this money, but you will get continuous insight on whether this improvement takes place, so that when these schools come asking for 100 crores, they can demonstrate they raised 10 crores, and donors from across the world plus India can participate in it. And SEBI will keep an eye on the project, on the bond and its performance. So that's actually one. The other way to do it is SEBI already had something called a social venture fund, a structure that was set up quite early, I think 2013 or 2012, which has not been used. Now, social venture fund is a very unique structure that allows you to register as an alternate investment fund with SEBI as a category 2, I think category 1, within category 1, and you actually can raise equity, debt, and grant as a fund, and you can actually give equity, debt, and grants downstream. So it can actually help you structure. You go to SEBI, you raise a bond, you raise a fund, and you can also list that fund if you wish to, and use that fund. I don't see any logical reason to listing a fund. So you can just go to SEBI, register yourself as a social venture fund, and then use it to actually do a lot of work in terms of how you want to distribute money. You can actually go and tell the world, I want to raise a 100 crore fund, which will give you 2% return, but it will, or I will just, you give me 100 crores, I will use this 100 crores to create 10,000 jobs for the migrants who have gone back by helping them start businesses at the grassroots. Your 100 crore will be returned back to you. If we generate any returns, the risk we are taking is we are going to help migrants who have gone back. It is possible we may lose all the returns. However, your 100 crore will be returned to you. So that's actually one way of thought process. You can also do, I will return 2%, or you can say, give me 100 crores, at least 75 crores will be returned to you. In the process, you will create 10,000 jobs. Now, so you can come up with these thought process that you cannot do in the current structure when you are doing a alternate investment fund of venture capital, etc. Even though in reality, a lot of venture funds actually don't deliver any return or deliver less return. But in a social venture fund, you can go and very proudly say that I'm going to do it like this because I'm doing something which is of social importance and make that. So that's actually the other idea. There is a third idea which is already in vogue, which again can be done and brought into mainstream. For example, you list a mutual fund. You list a mutual fund. You ask people to participate in, and now KK participate in this mutual fund, and the mutual fund says, okay, you are participating in me. I am going to generate returns. And when I generate returns, would you like to give 20% of your returns to a cancer foundation, 50% of your returns to a cancer foundation, 100% of your return to a cancer foundation or an NGO of your choice? Right? There is already an HDFC Cancer Fund which exists, which is doing this activity. Can we create 100 such funds? which are dedicated to generating and protecting by investing into the mainstream economy, protecting your capital, but the returns generated are being used to finance the not-for-profit world. So that's actually other instrument, which we basically learned from a product that exists and try to use it as an opportunity. For the for-profit world, it is actually about listing the company like any other stock exchange. But here, the enterprise has to demonstrate how it is going to make a positive impact. I have given some examples in the past. Let's say our waste company, we are going to clean India, CO2 sequester, create these many of jobs. Very clear idea, and we will do this while being profitable, and then go and list on social stock exchange, where an investor sitting in anywhere in the world who want to play a role in carbon sequestration, who want to actually play a role in recycling, can all become an investor. So you can have everybody from Coke to Pepsi, their treasuries can participate, because these guys are all looking for large, transparent, ethical businesses that are actually solving sustainable development goals problem. It is also possible some of the largest world's pension funds, who are actually multi-trillion-dollar pension funds, are allocating 2, 3, or 4% of their capital, and they want to have access to such companies which are transparent, tradable, and regulated, so that they can participate in them and exchange. So that's actually another instrument that has been thought for the for-profit world.
Thank you. So, ladies and gentlemen, we all say time flies, right? And when you have a subject matter expert like Vineet, time flies much faster. So you won't believe it. We already passed the hour, passed the half an hour with just 2 questions. And he has brought in such a lot of details and such a lot of interesting things that he is talking about. It's like, you just have to hear him and say, yeah, this is what we are hearing is something great. Yeah. And so I would request you to start asking your questions right away. Okay. I'm sure there will be a lot of questions coming your way, Vineet. And so please put in your questions. You can put your questions in the Q&A box, or you can ask him directly. He's open for both of these types of answers. So I'm opening up this. And as I open it, I see that there is already a question to you, and it is coming to you, none other than Mr. B.S. Murthy, very, very experienced banker. Mr. Murthy, can you please unmute yourself and ask the question directly to Vineet?
Thank you, Mr. Vineet. I think, as usual, very interesting concept. I think it's
very interesting.
Very interesting.
Yeah,
I think
extremely.
pathbreaking. I think where I think we can forget some of the isms that I think if projects like these succeed, I think that's where we have been debating this about ism for centuries together. But I'm trying to understand, because I'm not fully conversant with the subject and all. So you said rightly, there's a 600 billion opportunity for the country, right, per year. And then the money would flow provided there is a regulatory environment, because the donor ultimately is a donor, not an investor, is assured that these monies are utilized for the purpose for which they're given, basically impact assessment and all. But as you yourself said, what is the regulatory environment? Number one. Number two, ecosystem, right? One is the regulatory system. Second is most important is what kind of ecosystem we need. But coming back to these, probably I've not seen that report that I would go through, because I'm not aware of that report. See, SEBI, as you said, basically is what, number one, their job is to protect the integrity of the capital markets, A. B, protect the consumer interest, retail investor interest, especially retail investor. So all that did, and then it does clearing and settlement to make sure that the integrity of the markets is protected and all, which they've been doing quite well given this. So their main job, is basically surveillance, not ensuring the end use of the funds. And I'm not sure whether SEBI has the bandwidth to ensure the end use of the funds. I'm trying to say that, are they the right unless they create another subsidiary to that? Because we know creating another regulator is again is a long shot. I mean, it's not a moon shot, but it is a long shot to do that. So is there any alternative to SEBI? In your thought process, I'm sure you would have interacted and then issues involved. Because SEBI does not monitor the performance of the companies. It only ensures the securities are traded within the given rules. Here in this case,
Mr.
I understood you. This one, okay. This is mine. Second one is, what about the ecosystem? Today, even the digital payments now are successful because of the ecosystem that organizations like NPCI and other fintech companies have created. India Stack, NPCI, and other fintechs. So that's my thoughts and perspectives. If you can throw some light.
Yeah, so Mr. Murthy, let me actually first start by saying this is actually a SEBI committee. So it's set up by SEBI, managed by SEBI, and we were appointed by SEBI. So the report is actually a SEBI report, not my report. So it's actually, so finance minister had actually entrusted through the parliament and asked SEBI to put together a committee to set up a social stock exchange so that we can actually use the capital markets to help the people.
No,
so
I
that's
understand.
really,
you replied that question, I think, one step ahead. No problem. If SEBI itself takes initiative, is good. Absolutely no issue.
Yeah, so that's the first and the most important point. The second part is of the ecosystem, and I think you will be interested to know that I'll just let you give you an example of what has happened. You've heard of microfinance in the past. In 2001, when I started looking at microfinance, India's total microfinance assets were 100 crores.
Yes.
Just 20 years back, no infrastructure, no support, no backing. And in 2020, the total asset base is 3 lakh crores. Thrice the governor of Reserve Bank of India, when he has gone on television, has mentioned microfinance in the first 1 minute of his speech, which will also interestingly tell you how things change as scale will come in. And why did microfinance become so successful and so scaled in India is because there was actually a very high quality of manpower, which was actually working with microfinance when it was small. The banking sector, when it discovered microfinance, started scaling it up. It created some kinds of disturbances, problems, challenges. You know about Andhra Pradesh crisis, etc. But as on today, it is one of the most well-regulated, self-regulated organization in the country, which is MFIN, Microfinance Institution Network, is actually in microfinance. They have one of the most extraordinary. They have their own credit bureau. They have they use all the credit rating companies have actually started coming up with instruments and ways of credit rating. All the big four, big 5, big 6 are all involved in auditing of these things. I think same thing about impact investing. Impact investing in India started in 2001. We at Aavishaar were the first ones. But the terminology in the world in terms of how impact is looked at, there are global taxonomies now called IRIS. There are GIRS, which is actually a rating system. There are many different things. There are classifications in America on an impact. It's called B Corp. You can get a classification also. So in the global parlance, there is a lot of ecosystem development has taken place. There is a significant ecosystem development that has taken place in India, and there is a significant amount of education that is going on. Impact investing in India is actually on an annual basis is attracting $1 billion even now, and which is without a social stock exchange. Now, what we are seeing is the global quantum of capital, which is roughly 750 billion already, can translate out of this 750 billion, maybe 20% of its capital to India, which is roughly 150 billion. That will become 30% of our capital. We get $1 billion, which is insignificant compared to the 650, 700 billion we need. It is not because we don't have the ecosystem. It is because our ecosystem is not being talked at the global scale. And this social stock exchange changes the paradigm. So we have manpower, we have quality of people, we have thought processes, we have rating agencies, we have all kinds of people who will take 12 months, 18 months to actually become experts in helping SEBI make the right decision. As you know that SEBI, when I go for a listing, before I get my tokens, SEBI will carry out an entire study on my claims. Now for that, initially SEBI will have to use other people, but sooner or later that becomes the whole idea of making sure that I am not cheating my investor who comes in and buys my stake. And to me, to a global investor, that's actually a very big, very positive relief. How SEBI will do it, I think, is an interesting question. Probably SEBI is more equipped to answer than we. But it seemed to me that the government and SEBI are both aligned on this thought process.
So pending this probably regulation, are you thinking of putting in place an assurance system? Because the putting in a new regulator will take a lot of time, as we know. Pending that,
I don't think
have
so.
an interim assurance.
Yeah, no, I don't think so. There is a regulator needed because SEBI is the regulator. There's no new regulator is going to be. SEBI is actually going to regulate it. What SEBI is going to do is actually, and it has already done, for example, there are some interesting, for example, there is this small exchange which is slightly different from the main NSE and BSE stock exchange. They have actually this SME exchange, which is actually sub-regulated by the stock exchanges themselves. I think SEBI will find innovative ways of doing it. It is not going to probably let it linger for long. So I don't think so a new regulator is being created. SEBI will use proxy regulations to actually defray the amount of work. But this is all speculative. I really do not know how SEBI operates.
Anyway, let us hope and wish all the best. I think a wonderful idea. Thank you.
Thank you, Mr. Murthy and Vineet. Wonderful answer. Were you a professor before, Vineet?
No, I'm a forester. I used to hang on trees.
Okay. I mean, so well you explained. Okay, I have another question to you coming from Sandeep Saxena. He asked a question, can international NGOs list on the social stock exchange?
Yeah, well, see, I think the social stock exchange is not really about who can list. The listing is for the securities. So if you actually create an international NGO wants to create an impact bond or or social venture fund or wants to participate and collaborate with 20 NGOs to list a product, the security can be listed because the NGOs, whether it is international or local, does not have a security. And I think the SEBI would want the capital to be utilized for India. So if an international NGO in India identify a certain kind of security and lists it, I don't think so there is going to be any issue at all.
Okay. Sandeep, I hope you got the answer. You asked one more question or somebody else asked, but it's the same question, so I'm not repeating that question. Vineet, what problem does this SSE solve for the country where there is no consensus in the wider social impact community about what is and what isn't a social enterprise? You know, how do you define it? If that itself is not very clear, how does the stock exchange help the country, that's specifically India?
So I think it's again a very interesting question. So I can give you a very complex answer. I can give you a very simple answer also. Complex answers do not yield results, so I'll stick to a simple answer. So let's actually think about what is impact. Let's assume for a minute, what is impact? Impact could be that I create jobs, but then you will turn back and say, so does Reliance. So is Reliance a social enterprise? Which company does not create impact? So I think let's first start by saying any business activity, if it does not have a demonstrable negative impact, has a positive impact. And that positive impact is par for course, and it is happening. So whether it is Hindustan Unilever or somebody who's running their own shop, they're all creating some kind of impact. Now the question comes, how is that impact different from impact being made by an investee of Aavishaar, which wants to list on social stock exchange? Now there are very different ways SEBI can tackle this. One of the ways to tackle it is we will accept you as a impact or a social stock exchange listable company if you have raised money from identified impact investors. Who are impact investors? There is an India Impact Investor Council. That council has around 40-50 members. These members actually have made commitments by signing and being part of this council that they will make investments into companies. They have very detailed investment process. So just to give you an idea, Aavishaar's, before it makes an impact, before it makes an investment, or before it actually talks to the, engages on the commercial side, has something called an impact screening. So we go and do an impact screening, and whereby we come to a conclusion whether this company actually is making any impact in the business it is doing. Then we do something called impact benchmarking, which means we try to identify, as on today, what are the criteria on which we believe this impact is being done. And we then quantify what the company is doing. And when I put in capital, we do an impact projection over next 5 years, how this company's impact will grow. And then we do an impact reporting. So we do 4 steps. all these 4 steps actually in some way will be encapsulated, and when the company goes to list, it will have to actually demonstrate through an impact screening. First, it has to say, okay, Aavishaar is an investor, or Alok is an investor, or Ankur is an investor, so that SEBI says, okay, you have 1 tick verification. The second, okay, Aavishaar claims it does impact screening, it does impact benchmarking, it does impact projection, and it produces a report. Can you produce these 4 things to us so that we can see what kind of impact you made and what kind of benchmarking is done? Maybe there will be credit rating agency which will say, okay, I will develop a credit rating tool which will tell you what kind of impact you make. And once all this is done, why, if let's say I'm a very profitable company, I will have to make a choice. Why should I go to social stock exchange where I have to do so much of additional work? I can go and list on the normal stock exchange because I'm making profits. So if I, as an entrepreneur, am only interested in making profits, I can go and list there. But imagine if I am doing all this extra hard work and I go and list on a social stock exchange, and imagine in the world, there are hundreds of billions of dollars that want to come into India. And they see this company which has taken so much of pain and doing so much of disclosure. I think then I have an interest in getting a premium for the impact that we are making that the mainstream stock exchange is not going to give me. And that's really where the social stock exchange can create value, not only just by attracting capital, but also creating a valuation to the impact that we are making. Now, that's actually a long distance, this thing. There were ideas that people like me have that we should have an impact token which is tradable. We did not go that far, but we did talk about a CSR token that can be tradable. So we did think about very innovative thought process. To me, I think the most interesting thing is the whole idea of what is impact, how is impact different, how to articulate that, how to document it, how to demonstrate the positive movement of it will come if you want to actually take the benefits, the regulatory benefits that one will have as an investor coming into a social stock exchange. So for example, we have made significant recommendations on what kind of benefits an investor who invests in Indian social stock exchange should be granted vis-a-vis that same investor participating on National Stock Exchange or Bombay Stock Exchange for buying a company's share that is Indian, but not necessarily claiming to make an impact.
Okay. So, there is no doubt that this is definitely forward-looking, okay? And bringing it under the regulator like SEBI gives it such a lot of credibility to the whole ecosystem that we will develop as time goes. But you said that there are already 14 such countries having stock exchanges. So what have you learned from them? Are they successful running running these kind of exchanges?
So the learning is it's very difficult to run this kind of exchange for the simple reason that each one of them have actually been experimenting to be a knowledge repository rather than an exchange. So that's the first part of it. The second part of it, to be an exchange like this, you have to do a significant amount of global sales process to sell the idea of exchange. And the resources that are needed, those stock exchanges did not have because these are themselves startups. Think about it. If I am a startup stock exchange, I have to struggle to survive to raise money for my own survival.
Yeah.
Which is exactly why the report that the social stock exchange has written, we have strongly recommended not to encourage. We have not said don't encourage, somebody can come up, but we have said you have to first tell and talk to the current stock exchanges and let them have a social stock exchange, not actually have a social stock exchange come up as a startup. Because this is a very challenging, if you don't have deep pockets, you don't have networks, you don't have global outreach, you don't have a voice in the global capital system, you will not be able to actually articulate the positivity that you will bring to the table. And so in that sense, I would say the committee has been very wise in saying that we should try to make the current stock exchanges actually get interested in this space. And let me be very honest, I was actually pleasantly surprised by the positiveness shown by all the major stock exchanges in India to actually think on those lines. Okay, so we look forward to that. But there was this Brookings institution that came out with a survey which says there is which reports a lack of common standards for measuring impact in India. We talked about impact investment in India, but they are saying that there's a lack of common standards measuring impact in India. And
that metrics being used might lack credibility. So against this background of this institution, how will a social enterprise be valued on a social stock exchange if it comes to have an IPO or some such thing?
So I think let's actually be very clear. I think there is lots and lots of global terminologies, and there are a lot of work which has been done. The reason why it is actually not common, because it's not easy to make it common. So I have a very different view, you have a different view, etc. It takes time. So for example, there is a taxonomy called IRIS. It's globally common. There is similarly a rating thought process called GATES, which is common. Similarly, Aavishaar Group has actually developed a very detailed geography-linked thought process called PRISM. It has been acknowledged in the Global Impact Investing report itself in 2013, 2014 itself. So it's not that the instruments are not there. It is the job of the regulator to say, okay, these three different criteria are by my accepted criteria. Simple. I don't think so. We really need to have one common theme to define it. It will happen, it will evolve. And I think the valuation that I was talking about is actually a demand and supply equation. So if I am actually making all the disclosures, those disclosures probably may not be as simple as probably an international investor may want, but they would still want certain level of disclosures. I think ultimately when you try to look at impact, there are 4 different kinds of impact one makes, and I'm actually simplifying it quite a lot. But what do? You create jobs and livelihoods. That's an impact because you're creating jobs and livelihood. Let's assume for a minute, why do people walk from Mumbai to Jharkhand? Because there are not enough jobs in Jharkhand. So let's say if I actually go and say I have created 10,000 jobs in Jharkhand, will it actually be a quantifiable metric to measure? So jobs and livelihoods are both quantifiable metric. They are also very acceptable metric. And there is a second side of it. If you provide education, if you provide health, if you provide insurance, if you provide financial inclusion, you are reducing risk and vulnerability in the life of people. Risk and vulnerabilities. These are all quantifiable. I have educated 200,000 people whose average annual income was below this number. Very quantifiable. So people will have to come up with quantifiable and verifiable metric. And you will have to say that I have done that. Of course, there is something called, I did policy advocacy for a law that bans child labor, right? Yeah. So an NGO says, I am doing policy advocacy. They will have to define their contribution, participation, etc., to make that claim. So I think, therefore, I agree that there needs to be actually a very uniform, literally, because no investor wants complexity. They all want simplicity. It is an ideal world, but if all the things were there, then India would have been shining irrespective. The fact that we are challenged, we have to make an effort knowing fully well that these systems do not exist and we have to work towards them. And I think the fact that SEBI is going to be participating in it, it would, and there is a clear belief in the committee that SEBI, along with all the ecosystem players, including people like us, will help SEBI to come up with those criteria that will help it to come up with a common minimum standard.
Okay, look forward to that. Let's take a question from the media. So Krishna Tripathi of ETV Bharat would want to ask you a question. Krishna, can you please unmute and ask?
Yes, Mr. Rai, am I audible to you, sir?
Yes, you're audible.
Sir, once again we have come back to the debate whether to extend moratorium or not, and some people have already spoken against the extension of moratorium. I just wanted to ask your views on this thing, whether you are okay with the third round of moratorium, extension of moratorium, and second, whether now we should distinct business borrowers and EMI borrowers like home loan borrowers, because they are two distinguished set of borrowers. So could you please elaborate on this thing, sir?
This is not stock exchange question.
This is not a stock exchange question. So let me actually, I think it is actually it's an interesting question, but it's an interesting area. Whether moratorium is good or bad, we don't know.
Yeah, it's a debate.
Whether moratorium will destroy discipline or will protect people, whether moratorium will spread the risk over 2 financial years. I think there are many intricate questions that are being answered. Are people taking advantage of moratorium? That's another question. that some luminaries have argued is taking place. All that is true. I don't think so. I debate that. But at the same time, in my view, there are two sides of the coin. Those who have actually given money and want to collect it as quickly as possible don't want moratorium. Those who have actually taken loans and don't have the income to pay it want moratorium to be extended for 5 years. So I think this debate, it's actually a time where probably it's an interesting question for the regulator to deal with. I am fine either ways. And I'm actually in the financial services space. So, but we believe we are fine either ways.
But what about home loan borrowers? Do they need special measures unlike other segment of society, because that is a basic need to have a roof on their head?
See, I think what Reserve Bank of India probably is trying to do is ask or basically tell the lenders to be compassionate. And this is really what is happening. Moratorium is also being implemented on a compassion basis. So if you really are challenged, then I want to help. But if you're not challenged, then you should not seek help. I think it's an issue of compassion, really, not really about moratorium in my view.
Vineet, I have a question from YouTube. It says, in London, where SSE acts more as a directory connecting social enterprises with potential investors, while in Canada, as an online platform where even retail investors can invest in funds or companies with social impact. So if you were to compare these two, what's the plan for India?
Well, we are actually, as I said, these two are not really good comparisons because we are almost 10x ahead of both the arguments. We are coming from a very different point of view. We are actually saying, we are not trying to say that investors are not looking to find entrepreneurs or entrepreneurs are looking to find investors, or there are retail investors who want to participate. We are actually saying something entirely different. We are saying that first, the classification of social enterprise go from not-for-profit to for-profit. Neither of the two exchanges actually talk about that. Even though I think the Canadian one actually does talk about giving donations, but it is essentially a platform. A platform is very different from an exchange. So I think one needs to understand that. Second, we are talking about listing of securities. Third, we are talking about securities which can be participated by a retail investor, a wholesale investor, an insurance company, and the entire global world. Fourth, the regulator is going to provide an oversight and a guarantee that things don't go wrong. None of the other exchanges provide that capability, which is effectively the government of India and its regulator are directly involved in managing the entire process. So that's where I think the whole India argument completely walks away from all that has been happening in the world.
Okay. Another question I have is, are standard reporting norms and impact measurement for NGOs that seek to raise money through the SSE, are these being discussed?
Yeah, so there is a lot of discussion that is going on. There are lots of recommendations that have come. There was a survey that was done. And I think ultimately, as my guess is our report will go to the parliament, it has to be accepted. Post that, SEBI will be directed to execute on it. And by the time all that happens, there will be a significant and a very robust debate and discussion that will take place on what will be the reporting norms. Again, we have to be very, very aware that reporting for an education institution or 100 education institutions who are trying to list a bond is going to be very different from 100 health education institutions who are trying to list a bond versus somebody who's trying to create jobs for migrants versus somebody who's actually trying to do a policy advocacy bond. So I think we need to just be aware that just because we will come up with a terminology or we are talking about the social stock exchange, it will not be simple. It's going to be complex. There will be a significant amount of leadership that has to be shown by institutions from different geographies or different kinds of sectors to actually come up with their own terms and conditions. I think I am doubtful that given the breadth of the impact portfolio and the not-for-profit and for-profit, with that we are going to actually come up with a very simplistic so there will be some nuances that will come in different sectors, and the reporting therefore will be a fairly engaged process. And there will be a significant amount of exchange before accepted module is put together.
Thanks, Vineet. Vineet, we are past the hour. Can I take one more question?
Yes.
Okay. The Ishat committee, I think this YouTuber has read the committee's report, and he says the committee has also recommended tax benefits and regulatory clarifications. What are these, and are there anything that has further been discussed?
First, what are these there? If you have read the report, then they are there in great detail in the report. But very quickly, we have talked about FCRA and its implications specifically to exempt in case you are using social venture funds, because the reason you apply FCRA is because the capital is flowing, foreign capital is flowing, and it is unregulated. So once it is regulated, should FCRA apply or not apply? There are actually tax benefits for those who are participating. There is extension of tax benefit. There is actually speedy disbursement of ATG, 12A, 12A registrations. And there are many similar recommendations for both for-profit and not-for-profit world. There are also exemptions to be given for the CSR contributions. For example, in CSR contributions, it is not deducted from the CSR contribution is not deducted from the revenues or from the revenues for the income tax purpose. If it is not in a certain specific sector like rural, etc., etc., we have made a recommendation that it discourages people to actually spend in other areas. So, given the importance of it, most of our recommendations are focused toward making things easier rather than difficult, and to take away very sectors focused or very minor irritants which actually exist within the legislation.
Thank you, Vineet. I think we have to wind up. There are a couple of more questions, but this is a topic which is, I think, caught the fancy of the participants out here. Very, very interesting. And I think, Vineet, I must thank you. You have put it so well that it has created a lot of interest. And I'm sure we would like to talk about it, maybe version 2.0 at some other show that we will invite you for that. Ladies and gentlemen, let me sign off by saying that India is a home to more than 2 million social enterprises. Vineet also spoke about it, both non-profits and for-profits. Hence, the recommendations regarding the listing of the non-profit organization on social stock exchange need definitely careful planning. The news is indicative of a larger shift towards increased mobilization of domestic capital for social purposes and reducing India's dependence on foreign aid. Perhaps that's what even Vineet said, that the foreign aid, which comes with a lot of strings attached to it, and sometimes it gets not good for the country. I think we may get over it with this. And before I say thank you to Vineet, let me remind participants that tomorrow we have Mr. Ramesh Ganeshan, Head Transaction Banking of IndusInd Bank. He's going to talk about driving digital transformation of corporate banking. Again, we are going to talk about perhaps a new subject on corporate banking, like we did today on social stock exchange. Vineet, once again, thank you very much. Like I said, with you, time just flies, and this 1 hour has gone just like that. I thought I just sat 10 minutes before, and the time is already over, 4 o'clock. So we would love to have you again. And thank you very much on behalf of all the participants. I wish you a very good evening for the day. Thank you very much.
Thank you. Thank you so much.